with the real possibility of a major market correction and a future recession ahead. Investors like myself are always searching for safe havens and places to put our money where it can hopefully be safe regardless of what happens next in the market. And for those investors out there that aren't really willing to risk their money, at least not in the short term, and don't want to ride the wave of volatility over the next year or so, in this video we're going to go through a few different opportunities, a few different options where investors can stash some cash and earn a healthy amount of yield along the way, at least as long as the volatility remains high in the market and maybe until there's a better entry point for your cash. Now, if you're interested in learning more about some of these different opportunities, make sure to please drop a like down below and subscribe for more future content like this. Now, first off, I think it's safe to say for those of you out there that don't think there's going to be any more market turmoil ahead or a possible recession in 2024, then some of these different investment options are most likely not for you, as you'd probably rather just put your money in the S&P 500 and hope to ride the wave up during the next bull run. But for the investors out there that are still concerned about the future of a possible recession in 2024 due to things like higher than usual interest rates, which are now at 5.5% and have been that way for a while, and the possible fear of more interest rate hikes in the future, there are some really good opportunities in the market because of this, and I'm talking about fixed income, bonds, and CDs. Now, if you're familiar with both US Treasuries, bonds, and CD certificate deposits, take a quick look right here and look at some of the yields that are being offered as of recent. Now, this specifically right here is in the Fidelity platform, where you can buy US Treasury bonds and of course you can buy certificate deposits, all brokered right through the Fidelity app. But keep in mind, you don't necessarily have to use Fidelity. You can use your brokerage most likely, and or plenty of other websites and providers out there. But for example, for the investors out there like myself, I think the market is going to be all over the place in the next 1 year time frame. Right now, there's various different CDs, certificate deposits, that you can lock your money up in for a while and get paid around a 5.5% yield for doing so. And this is with literally no risk at all. So for example here, Citizens Bank, which is a pretty well-known provider, is offering a 5.5% yield for a 1 year duration certificate deposit. Now, my thinking when it comes to using CDs in the current market is pretty simple. I happen to think that personally, hopefully by this time next year, towards November of 2024, I think that interest rates should hopefully be down quite significantly from where they are right now, and that the possible recession towards the beginning of next year should hopefully be blown over. Now, that's why I personally have quite a bit of cash right now stuffed into various certificate deposits, because by locking up the money and earning a nice healthy yield in the meantime, it's allowing me to earn some significant interest on some idle cash without having to risk it in the meantime. And like I said, for me personally, I think there's going to be many opportunities come this time next year to redeploy money into the market when interest rates are lower, and I think that we're going to be back on the up and up. Now, to dig a little bit deeper in how some of these brokered CDs work, of course, the brokered CDs are going to depend on your specific provider, your specific brokerage, but simply put, there's different banks, different providers that offer different CDs at different maturity lengths. In this case, these are all a 1 year CD. Some of them are callable, which means they can be called early by the provider. Some of them are not callable, and some of them pay a monthly distribution, but most of them, as you see, pay at maturity. Now, as far as which bank or which CDs you're going to want to pick, of course, you're going to want to do your own research when it comes to that. But for me personally, I normally stick with some of the bigger banks. I normally stick with something like JP Morgan, because normally the bigger banks offer a pretty fair yield and of course have the stability behind that. Now, another potential good option for investors that think that there is going to be a recession within the next 12 months or so and want to invest their cash in something very, very safe along the way, you could of course also invest in Treasury bonds. So right here, once again, is on the Fidelity brokerage, and these are all different Treasury bonds that are currently yielding around 5.54% as of right now. And with Treasury bonds, there's going to be different durations as well. But this right here for the 3-month maturity example, we're looking at around a 5.5% yield, once again, literally risk-free. So next I came across this is sort of interesting. It says 2024 projections. What's next for the US economy? Despite slowing growth, Federal Reserve staff are no longer forecasting a recession due to the economy's resilience. Who thinks a recession is coming? Let's take a look. So then this is sort of interesting. It says bull case. Consumer spending, which accounts for 70% of US GDP, is underscoring economic optimism. Where bear case, household debt hit a record of 17 trillion, while corporate defaults have accelerated in 2023. So the Fed staff thinks that there's a 0% chance of a recession apparently. But 69% of consumers think that there is going to be a recession coming soon here. Next, Goldman Sachs 15% says yes, 35 to 40% of Bank of America, and 84% of CEOs. So comment down below what you think about the future recession ahead. this is going to get interesting. So if you consider yourself a consumer like myself and you have some idle cash on the side that you're searching for the perfect safe haven, there are definitely some good safe havens that are also offering significant amount of yield as of right now, because of course, when interest rates are higher, CDs or certificate deposits are going to be able to offer much more yield, as well as of course, when interest rates are higher, bonds are of course going to be offering significant amount of yield. Now for me personally, I'm always going to keep some cash balance on the side to buy some more long-term holdings for my portfolios if there are deep red days or possible corrections or a recession ahead. But with the majority of my money right now, for me personally, I'm locking it up in 3-month, 6-month, 9-month, and 12-month CDs and then some Treasury bonds, because I'm hoping that by this time next year, there's going to be some amazing opportunities if we do see a 20 to 40% drawdown like a lot of analysts are saying. I think it's important to note that recessions have a way of sending tremors throughout the markets, and that's why I think it's so important to know some of the options and some of the more safe havens when it comes to fixed income options. And when the economic outlook remains uncertain and volatility remains, investors often seek what we like to call safe havens. Now what I mean by when I say safe havens, I'm talking about an investment that is known to not only be stable but also secure in times of potential turmoil. And while no investment, including the ones we went through in this video, are necessarily guaranteed safe, like for example, for some reason, if the underlying bank went out of business from the CD that you were issued, of course you are going to have, say, FDIC insurance. It still really just does go to say, and it's important to remember that no investment necessarily is for sure safe. And maybe the safest investment at times is not even investing at all. Now, my main plan moving forward is preserving capital, like I said, because I want to have a nice amount of cash balance when we get out of this downturn that we're probably going to be in it for a little while now. And when recession clouds loom on the horizon, the primary concern for most investors is to preserve their hard-earned capital. And this is smart because recessions typically usher erratic market conditions and crazy amounts of volatility. Now, we don't know if we're necessarily going to have a massive recession moving forward, or maybe somewhat of a smaller recession moving forward. It really depends on what happens during the next few Fed meetings. But by relocating your cash to safe havens, you can drastically reduce the risk of losing your principal investment, which none of us, of course, want to do. This not only helps safeguard your wealth during the downturn, but also positions you to seize opportunities once the storm passes. And that's exactly what I'm planning on doing, because having a good amount of liquid cash come this time next year, due to different maturities through CDs and maybe even bonds, I'm going to personally be left with a lot of cash balance ready to deploy in high quality investments that I'll hopefully hold on to forever. But now I want to hear from you guys down below when it comes to the possibility of a big time recession next year. Do you think it's possible, or do you think this whole thing is overblown with interest rates and all the pain in the markets? Comment down below what you think. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.